Good evening, everyone, and welcome to Pierce County Library's um, program in conjunction with Red Canoe Credit Union. Tonight, our friend Carissa from Red Canoe is going to be teaching us about saving for emergencies and for your retirement so that you can love your finances in the new year. Carissa, go ahead and take it away.
Hello, thank you for having me. I'm Carissa with Red Canoe Credit Union. I'm hoping everybody can hear us. I don't know if there's any way to do like a thumbs up that you guys can hear us. I just want to confirm that our audio, we were having a little bit of issue with audio prior to. So if there's anyone who can just confirm, whether it be in the chat or um, just let us know if you can hear us before we go any further.
And if no one confirms, we can just keep moving.
Okay. So hopefully you guys can hear us. And I just wanted to open up that if you have any questions, please feel free to put them in the chat. Usually whenever I'm doing these presentations, people have questions just about different parts of the topic that we're talking about, and I'm happy to answer any of those. So I'm going to go ahead and start with finding out how to fall in love with your finances. That's hold on, I'm just making sure that this is, oh, that was you. Falling in love with your finances, one of the things, it's the hardest things for people to do. And a lot of times it's because they don't necessarily have that grasp on basic budgeting, or they might have a little bit of a budget, but it's not working for them. And so it's something where if there's something off in the process, it can be a little bit more difficult to fall in love with, right? It adds extra stress, adds extra turmoil. So today we're going to hopefully give you some skills and some tips on how to do that a little bit better. And so I'm going to start with showing a video. So I've shared my screen, and I'm just going to make sure that we can see this. Are we able to see it? Okay, so I want to first start by showing you a couple of different resources. One, if you go into Red Canoe Credit Union, cu.com, this is our website, and this is where you can find some of these resources as far as videos. And so if you click on resources and you click on It's a Money Thing, and you scroll down, you can either and I'll show you this section here in a second, but you can click here to our YouTube channel. And on our YouTube channel, it has all of our different videos listed in list form. And so if you're not trying to search it by topic, you can find them there on YouTube. And so we'll look at that here in just a second. But what I will start with is you come down here into this page and you see money basics, understanding credit, savings tips, all about loans, security, adulting. And if I clicked here on, say, adulting, I could then go even further and look and see how you write a business plan, or budgeting 50, 20, 30, in which this is a video that we're actually going to watch together. Further down, if you keep scrolling, sorry, if you keep scrolling, renting versus owning a home. If you're looking to go to college, how do you save on scholarship applications and save time? If you're someone who's looking to get out of debt, there's getting through debt, paying down your debt. And then, of course, there's paying yourself first, overcoming credit card shyness, so on and so forth. There's tons of different videos. And then if I go up to the top again, and let me hit resources, It's a Money Thing, just to get there easier. If I come here to the YouTube channel, I can continue on to YouTube, and over here, I'm going to pause this real quick because it will start playing.
So, how are
If I come over here, you'll start seeing credit union versus bank, how your credit score breaks down, which is a really great video, foiling identity theft, and we won't go through all of them, but I just wanted to show you the suite of videos that you have available. Budgeting basics, you have emergency fund boot camp, leasing versus buying a home, or sorry, leasing versus buying a car, different types of loan structures, so on and so forth. And so today, what we're wanting to talk about and kind of hit home is budgeting. So basic budgeting, how you do the 50-20-30 rule, and then also how do you put into that budget enough space to where you're saving for your future you and your emergency you. And so the video that we're going to start with is budgeting 50-20-30, and then I'll have a couple of points that I'll hit home from that. And so let's go ahead and find that one. And I'll make sure you can hear.
Man, I do not have the budget for new shoes right now.
Over budget, eh?
Yeah. Sorry.
Maybe I can help. I'm a card-carrying budget builder.
I keep trying to make a budget that works for me, but it all keeps falling apart.
Sounds like you need a new approach. Don't hesitate to start from scratch and try again. Begin by getting your basic proportions right.
Go on.
A solid, well-proportioned budget will give you increased security, flexibility, and efficiency when it comes to money. You won't end up constantly broke before payday or saddled with out-of-control debts. What do you know about 50-30-20?
Is that a new boy band or something?
I like you. Allow me to demonstrate. Bring them in. Take your total net income and create a budget to spend 50% on needs,
I'm essential.
30% on wants,
You know I'm the coolest one.
and put 20% into savings.
I've got your back.
You get it? Start with your needs. Factor in all the essentials like housing, insurance, clothing, transportation, cell phone, groceries, and utilities.
But what if my needs cost more than 50%?
If that's the case, you have three choices: finding cheaper options, looking for ways to earn more money, or sacrificing a bit from another category.
Hey, lousy needs.
Your wants are the most flexible category, but they can also be the hardest to wrangle. Wants include dining out, concerts, movies, fashion, electronics, travel, subscription services, and all other non-essential purchases.
Okay, I'll rein in my wants if my needs are too expensive. Cool.
You could also sacrifice wants to put more into savings. Hey, back off, pal.
Yeah.
Savings are extremely important, and not just for big, long-term goals like buying a house or retiring. You can also save for short-term future expenses, like an annual payment or a needed computer upgrade. You should put some money aside for an emergency fund as well. Saving up ahead of time will help you keep your budget more manageable, so you don't have to resort to high-interest debt to cover unforeseen expenses.
Can I save less than 20%?
Sometimes you gotta do what you gotta do, but remember that your savings help with future needs, which aren't optional.
That's right. Ignoring me could come back to haunt you.
Alright, I like this whole 50-30-20 thing, but my real problem is sticking to the game plan. How do I keep my budget from falling apart again?
That depends on you. Do you want total and complete control? Then go old school and make an itemized spreadsheet.
And if I want super easy?
Then let technology do it for you. There are some great online tools and apps out there that make budgeting a snap, no matter which method you choose. Make sure you track your spending for 2 months to get a full picture of your spending habits. Then you can make adjustments to trim down your needs, maximize your wants, and stay on top of savings.
Nice. I can make it all work together instead of feeling like each expense is fighting for dominance.
Yeah, when your budget is well built, everything will fit nicely.
Awesome. I'll use the 50-30-20 rule as a framework and build myself a better budget this time.
Now you're talking. Go get 'em.
Ah. Whoops.
So I always enjoy watching some of these videos so that they kind of create a baseline. Let me see if I can come on here. So they create a bit of a baseline. I'm going to stop sharing and then I'll reshare. Okay. So I always enjoy kind of creating a little bit of a baseline for understanding, right? And so some folks who are watching this, you may already have a budget that makes sense for you. Some may have a budget that's been working a little bit, but you want to kind of refine it. And then some of you may be in a situation where you're like, I've not really even considered doing a budget. I don't even know where to start. So there's people all in between. I was just talking to someone the other day who they've done a really great job of saving. They have done a really good job of making sure that they prioritize and put into their retirement. And now they're like, I have to spend because now I've been really great about doing that. But now I almost have done it so much that and like gotten so efficient at it that now I have too much almost in my 401k, and my financial advisor is telling me go live life, right? So there's definitely from one side of the spectrum all the way to the other. It's okay to budget in some fun stuff and to budget in your entertainment as long as you have some of the other things under control. I think what happens also is a lot of times people will say, oh, well, I don't have the have it to save. And they pull it from the savings portion before they pull it from the wants portion. So if you are someone who is still kind of up in the air on what is the difference between wants versus needs, there's a video in our catalog that talks about wants versus needs spending. If you're someone who understands that, we can always do a session later on that, but assuming that people know the difference between the wants versus needs spending. Giving every dollar that you have a job. So if whenever you get paid, sitting down and saying, okay, here's all of my needs, right? My house, my utilities. I would say car, but that's also a want unless you are in an area where you have to be dependent on a car. So there's some times where people are like, well, no, my car is my need, but they live, somewhere where a bus stop is, or that they have public transportation. And if that's the case, then really that car then becomes a want as opposed to a need. And so if you're looking at your budget and you're like, I can't even make my needs be met, then sometimes those are some of the things that you then kind of let go of for a minute, and then you can always come back to it. So say for instance, if your budget is so tight that you don't have an option to make more money, and you have something like a vehicle, but you have public transportation available to you, your vehicle, your insurance, and then the maintenance on your car can sometimes help supplement that. Now, that's not, the fan favorite, and I get that, and it's not something that most people want to do, and I also understand that. But if in the case of you had to, that would be something to explore. The other thing that I always like to bring up is whenever you're trying to create a budget, especially if we have younger folks in the crowd, it's about spending habits, right? So when I, was younger and I got money, I was one of those people that it just burnt a hole in my pocket. The second I got it, I wanted to spend it. I didn't create the habits to give my money a job, right? And so if you are someone who is in the younger demographic, I urge you, please, whenever you get paid any kind of money, whether it be I get it for, a holiday, I get it for doing extra work around the neighborhood, I get it for allowance, or what any other reason you might get, money in front of you. I would recommend that you start using the habit of putting away at least 20%. 10% for your future you and 10% for your emergency you. And if you learn to just start building that habit, it then becomes something that's just automatic to you, right? And so the first time you go get a job, and if they happen to give you opportunities to invest in your 401k, you already have the mindset of, oh, I automatically want to put 10% in, or, if your company matches at least up to whatever they match. So I work for a company who matches my 401k to a certain point. So I want to maximize that. So I put in as much as they match at least. And so if you're finding ways to put into your at least 10% into your future you, that amount of growth that can happen from the time you're 18 up into your older, there's no way that you can make up that ground as you get older. So if all of a sudden I'm 40, 45, and I'm like, oh man, I haven't started yet and I need to make up for it. There's no way you can make up for that lost ground because there's a maximum that you can put in. And so if I haven't done that whenever I was younger and built in those habits and kind of invested early, then every year that goes by, I'm losing a little bit of ground. Now that's not to discourage you, that's just to understand the reality of it. The other thing is if I'm depositing and investing when I'm younger into some of these funds and these funds that are being invested, they're starting to earn interest. So my interest is actually earning interest. So if I put in $400 that year, I make interest. So now it's $410. Now I'm making interest on the 410, right? So that's the compounding interest is my interest is now making interest and making me money. And so it's really important to make sure that somehow you can find a way to make that a priority. Because again, as you get older, there's going to be a point in time that if you have not been able to figure it out, you're probably going to be sitting with, oh man, I wish I would have started younger. There's never going to be a time when you're older that you say, I wish I hadn't have done that. I wish I hadn't have put money away for myself. Usually it's always the opposite. The other point I wanted to kind of talk about is saving at least 10% for your emergency you. So whenever you think of your emergency you, I think of things like all of a sudden I walked outside and I tripped on the curb and I broke my ankle. That's an emergency that I wasn't anticipating. If I do or do not have insurance, regardless, I'm probably going to have a cost to it. And it was a cost that was unexpected. It's not something that I'm like, oh man, I can't wait to pay on my broken leg later this month, right? So it's something that you just don't know is coming down the pike. There's some times where people will say, if I get a flat tire, that's an emergency. I'm urging people to stop considering that an emergency and thinking that that's a budget item that every month I need to put a little bit of money into my car maintenance, right? So if I have my emergency fund and my future me, that's a total of 20%. If I have any extra to put away to my vehicle fund, my maintenance fund, I want to start funneling money into that, right? So it can be something small, like 5% or, 20 bucks every month or whatever. And the reason I say that is because there's a lot of times where people will have their emergency fund and then they use it for their spare tire or their oil change or something that could have been anticipated. And then they drain it for when that broken ankle happens. And so I really try to urge people to, like I said, give every dollar a job. When we get paid, instead of, going out and thinking about how we're going to spend it, sit down with our budget and say, okay, I need X amount for my household expenses. So that's already in there. I know that is something I can anticipate. So I'm already deducting that from the balance of what I get paid. So then whatever you have left over, you have this little chunk left over, hopefully. And if you have this little chunk left over, then it's okay. I need to pay my future me and I need to pay my emergency me. And then you have this little bit left over. And some would say to pay your future you and your emergency you before your household stuff. That's a challenge sometimes. Sometimes people are, living paycheck to paycheck, and we're in that scenario often, especially with prices of items going up, prices of electricity and water and all of our basic needs. Some of these costs are raising and inflating. And so sometimes that's not something we can prioritize first. Now, if your employer does a 401k, that is something that they can pull out before you even get paid. So if your employer has a benefit called a 401k and they've talked to you about it, then I urge you to try and put at least a certain percentage, whether it be 5%, 6%, 10% into that 401k. Because what's going to happen is they're going to deduct it before they give you the paycheck. So before you get your paycheck, they're going to deduct that already, and that's already going to be done. And I would do a percentage. There's some people who do a dollar amount. I usually urge not to do that. And the reason why is if you're doing a percentage, then if I get an increase in pay, so does my 401k. So if I get a raise, my 401k gets a raise, and so my future me gets a raise. And so I always urge people to try to do a percentage. That said, if you can do a 401k or something automatic, then it's already out. So whenever you get your budget, you actually have that tank of money and you don't have to worry about that part. So now you just have to worry about your emergency you as far as the 10%. So you take that, put that aside, and then do I have, like I said, do I have a vehicle? Do I have kids that are going to need braces? Am I planning to go to school? Like, what are some of the things I can pre-plan to say, these are the things I want? So I'm going to make sure I have a budget item for them. And then whatever's left over, that can be for your want or your wants. And so, if I'm really good at this and I say, okay, I have an entertainment budget, which is a great idea. If you have any money left over, okay, now I have an entertainment budget. So I'm going to put a little bit of money in the entertainment budget. Oh, I like to go eat fast food or I like to go out to eat. So I have a food budget for going out to eat, right? If I want to go to the movies or buy a video game or purchase, I don't know, if people, celebrate any holidays where you have presents, right? Or you are doing something along that line, knowing that it's coming up. So I'm going to start budgeting for it, right? So the worst feeling is whenever you get to the point of either the emergency, that particular holiday, the vacation, whatever it is, and you don't have the money saved for it. And then you're digging into your emergency fund. And if you haven't put any into your emergency fund, you're putting things on credit cards, which that's going to put you in a whole different hole. And so whenever you start having to get into your emergency fund and get into your credit cards or getting into finances that you have not anticipated, that's when we start falling out of love with our finances because they become stressful and they become toxic to us, right? And so anytime we have a toxic relationship with anything, it no longer becomes something fun and worthy of loving. It becomes very difficult. And so if we want to be in love with our finances, we have to understand them first, and we have to understand how we can navigate with them. And so I also want to show another one of our videos. So I'm going to go ahead and share the screen again, and we're going to go back in here. And so I'm going to go from the resource page again. And I like to do this just to remind you of where the resources can be readily available for you. So we're going to go to It's a Money Thing again. And on this page also, it's not just videos. We also have a blog. We have all kinds of financial literacy. One of the things I'm really excited about when working with Red Canoe and choosing them is that we believe in being the most impactful credit union in the communities we serve. And so part of that is ensuring that financial wellness is a staple in the communities that we exist in, and not just for our members. Sure, we would love to have you as a member. However, for anybody in the community, if we have thriving people, we have a thriving community. And so our goal is to try to give this information and have it readily available for anybody who is in our area and even beyond. And so it's really important for me to be able to show you that these things are of access to anyone. It doesn't live behind the portal of membership. It doesn't, you don't have to buy anything in order to do so. You literally have access to this at all times. So I'm going to go up here to, let's see here. I'm horrible at scrolling, my bad. We're going to go to adulting again. And one of the things I also wanted to show you on this was, let me scroll this way. One of the things I wanted to show you is we have not only the videos, but we also have a handout. So I'm going to scroll or try to find this other video here. Okay, so paying yourself first. We're gonna watch this video because this is part of this series. But what I wanted to show you really quickly is we have a handout that goes along with all of our videos. And so all of our videos have an accompanying handout that if you have access to a printer or you come to your local library and get it printed, you have something that can walk you along with the video. And so here it talks about paying yourself first, but it also kind of talks about a little bit of what we were talking about as far as, you know, if we want to have a vacation, if we want to, you know, make sure that our home is secure, our family, our vehicle. This basically is saying, what is your goal? Like, what are your goals? What are your goals for all of these different things? And so we are going to watch the corresponding video that goes with that. And of course, if there's any questions, I am not able to necessarily see the chat, but I know that my partner in crime over here is able to see the chat. And so she's letting me know if we have any questions.
Ah, dang. How am I ever going to save enough for a sweet vacation? Well, at least it's payday tomorrow. I wish I had lots of money in my savings account.
Hey, thanks for the change. But wishing won't help you build your savings.
I try to save, but I always wind up short on cash before I get paid again. So, what's the point?
The point is, you gotta pay yourself first.
Okay, I pay myself $10 million.
Ha! Not likely. Let me, Well, let me explain. When most people get paid, they pay their bills first, then spend money on fun, and then, with what's left over, they contribute to long-term savings goals. Problem is,
You wind up without enough left over.
bingo! If you want to start saving, take your total monthly income and subtract your essential monthly expenses. Then take a good chunk of the remaining cash and put it into your savings the moment you get your paycheck. Every time. Even a small amount each month can build up fast.
Well, sometimes I might forget to do that.
So, automate it. If you set up an automatic transfer into your savings account on payday, then all you have to do is sit back and watch the savings grow.
That makes a lot of sense. Kind of like how I go jogging in the morning, because if I leave it until later on, I usually end up slacking off.
Absolutely. And the best part is, you can use this technique for all your savings goals, like an emergency fund, your retirement nest egg, a down payment for real estate, or that tropical vacation you've dreamed of. You can even set up a separate savings account for each goal. Paying yourself first ensures that you're saving, and it lets you spend your remaining income stress-free.
Sweet. Next paycheck, I'm paying myself first. Sounds way better than wishing for more savings, unless you're one of those magical talking frogs.
Just the regular talking type, I'm afraid.
Ha, gross. So, can I get my change back?
Nope. That's going towards my savings goals now.
Oh, I'm still playing with
Hi,
it.
Raven. Into my...
Okay. So, one of the points that I like to kind of talk about whenever we talk about, you know, having different categories of savings. So a lot of times people will just have like the emergency fund, right? And so they're putting into that account. Well, what I oftentimes will tell people is if you have a checking account and you have your savings account attached to it, then it almost feels like there's a direct connection to it, right? So if I'm running low on my checking account, I can just pull it out of my savings account, which, yes, that's true. But if you really want to get really great at having an emergency fund, I would encourage you to open a completely separate account and even potentially opening it somewhere else, like having a secondary bank. And while we're kind of talking about this real quick, I want to talk about the importance of having separate banks and credit unions. And the reason why is because if I look at my financial institute or my financial situation as a stool, right? So it's a stool that I'm sitting on. And if I have one leg of the stool and a financial flood comes in and I lift up my legs, then that stool is not very stable, right? If I have two legs, it's not stable still. I might be able to kind of balance forward and back, but I'm definitely, not stable yet, right? It's not until you have three legs that you're really stable for those floods. It might be shaky and there might be turbulence, but really that's what it takes in order for you to feel really secure. So I say having at least three financial institutions is important because one, for example, my emergency fund. If I have my emergency fund where I typically do my banking, now all of a sudden I feel like I have immediate access to it and everything becomes an emergency, right? So if I am out of gas and I look at my, my checking account and I'm like, oh man, I don't have very much gas. And, I didn't really budget for gas to be in there. I'll just pull it out of my savings, right? Out of my emergency fund. And so what happens is non-emergencies start becoming emergencies. So really it's that I maybe didn't budget appropriately in order to say, oh, I have travel expense because I have a vehicle. So I have a separate savings for my travel expense, right? The other thing is whenever I have a separate account from my primary account holder, the reason sometimes it's really important, I'll give you a couple different. One, if I am banking with a financial institution and say, for example, they end up getting purchased, right? So my now financial institution is no longer the one that was mine. So they went through a merger or an acquisition, and all of a sudden their rules and their, stipulations have changed. So now all of a sudden maybe they're charging me more for my account. Or I walk in and I'm not working with the same people that I used to work with, right? If I don't have a good relationship with my bank, that's a problem, or my credit union, that's a problem. So if I have, if I go in and, Claire is no longer there and she was my person, and now this other person has no clue what my financial future needs to look like. Now I'm not getting that same support, right? So I'm upset because now they're charging me more fees and I don't have a relationship with the person and all my normal people aren't here anymore. So I'm angry. So now I'm closing my account when I'm angry and I'm going and I'm starting it with a new relationship while I'm still angry. So instead, if I already had some accounts already established and already had account numbers and all the routing numbers and all the things, if this person or this organization no longer makes me happy, I can simply just say, that's okay. I'd like to close out my account, and then you take your money and then you go over to the other financial institution that you have a relationship with and you put it in there and you start the things fresh, right? And it's an easy transfer as opposed to having to get all of the things reset up. So your automatic deposits are easier to transfer that way. You've already established a relationship with someone else that can help you with that stuff, and you're not starting completely from scratch. The other reason it's really important is because different financial institutions have different niche products, meaning they have different specialty products. Now, their checking and savings and money market and CDs, all of us have those, right? All of us have some of that same stuff. Whenever you start getting into niche products, meaning, so for example, Red Canoe Credit Union, we do land loans, right? Not a lot of financial institutions do raw land loans. Usually it's something where you have to build on it in a certain amount of time. And we don't have that stipulation. And so if someone banks at XYZ credit union over here, they may not know about that product, right? So if you're looking for, to purchase land someday, and then maybe 10 years from now, you're going to build a family compound on it or whatever that looks like, you may not know that that opportunity is there if you were just with one financial institution. The other thing is if I say I want to, go to college, or I want to own my own business, or, one of the things I oftentimes tell people whenever I'm having conversation, when I'm in in-person classes, I oftentimes will ask, what does financial success look like to you? And usually in the room, we're getting all kinds of different answers. We're hearing, I want to go to college, or I want to have kids someday, or I want to own a house. I want to travel. I want to own my own business. I want to have homes as rentals. So everyone's financial success looks very different. That's why it's called personal finances, because it's personal to each individual. So if I have these personal needs, and one financial institution doesn't have the product to fill every single one of these needs, that's why it's important to have multiple, because if this one doesn't, that one might. The other thing I really urge people when learning how to fall in love with their finances um, is finding a good institution that is there for you. And so I don't know how many times I've seen people or heard people say, yeah, I walk into my financial institution and I just feel like a number. I feel like I'm not important to them. They're like, next, next. If you feel like that, you do not have to feel like that. Like, there are financial institutions that look at you as a person. They want to sit down. They want to know what your future looks like. And so that they can put things in place in order to help you be successful. Also, if your financial institution isn't encouraging a conversation at least once a year to just kind of do a checkup, we all do checkups for our health. We do a yearly, usually checkup for our car. We usually do a yearly checkup on our house stuff, checking our smoke detectors. Like, that's usually good practice, making sure everything's in working order. We need to be doing the same thing with our finances, right? And so if we're not with an institution that isn't encouraging that, that's probably the wrong institution. So if you don't know your bankers by name, if they don't know you by name, if, they haven't taken the time to say, hey, is everything going well? Is there anything we can help you with? Or how's your budget, going? A lot of times people will feel very sensitive about being asked those questions sometimes, but the reason we want to ask that, it has nothing to do with being in anybody's business. It has to do with your financial success. I know I've said it before, but that is the business we're in. We want to make sure that you are getting the things that you have a goal towards. And so I always find it really important and very eye-opening, the amount of institutions that don't take the time out for that. Your institution should not be an order taker, meaning if I go into a financial institution and I say, I need a checking account and a debit card, if they're not having further discussion with you to say, okay, we can absolutely get you a checking and a debit card, but let's sit down and get a real nice picture of what you want your future to look like, so we can make sure that you're in all the right products and services. And all these products and services do not need to cost money. There's financial institutions out here that do not charge for these things. And so, we just talked about the paying yourself first, and you saw if you have different savings goals of different things. So I want to go on vacation. I also want to buy a home. I also want to maybe purchase a car. Maybe I want to, go to college, or whatever that looks like. They said, open separate savings accounts. Well, there's some financial institutions, and I can speak for Red Canoe Credit Union, but if I open up a savings, or if I open up an account, I can have as many sub accounts as I want underneath that savings account. So I can have 10 different savings accounts that are categorized different titles, that it makes really easy for me to say, okay, I need to put, X amount of money into my vacation account. I need to put X amount of money into my college fund. I need to put X amount of money into my vehicle fund. So it makes budgeting for those things so much easier. And like it said in the video, there's also opportunity for you to do automatic. So the second I get paid, I want to put, $10 in each of those categories and just continue doing that. And so then after that's all those automatics are done, then you have your total of what's left. And so that's a really great way to fall in love with your finances. Another interesting topic that I talk about a lot is there's some people who have like a salary, who get paid the same every single month, and they know what to expect. And then there's other people who are paid hourly. And so sometimes they don't necessarily get all the hours, or they get double the hours, and, their paycheck looks very different, paycheck to paycheck. And so sometimes whenever that's happening, whenever I'm getting paid these various amounts and I don't know what to expect, that can sometimes feel very, give me anxiety, right? It can make me feel very anxious because I know I have all these different bills I need to pay. So I at least need to make this much. And so I'm hoping that I make a little bit more than that or a lot more than that to where I can put away for some of these other things. And so I like to tell people the more that they can anticipate whenever it comes to finances, the better they feel about it. So again, like I'll give you an example. Whenever I had kids, as their teeth are coming in, I was like, oh my gosh, I'm going to need to save for braces because braces are not covered under insurance. And so I'm going to have to pay for braces for these two kids, and they're 18 months apart. And so I was like, okay, that's going to be something that I can anticipate. I don't want it to come out like I don't want to have to do this, but it's something I know I can anticipate. So because I know I can anticipate it, what can I do to get in front of it, right? So if I don't have the same paycheck all the time and there's a certain paycheck that I have overtime on and I get a little extra and I know that there's this expense that I really don't want to have to pay coming down, coming down the road, I might, whenever I'm making that extra money, throw some money into there so that way, whenever I'm not making as much money and I'm not able to necessarily put away for that, I have that cushion a little bit. And so that's sometimes how you can overcome those issues. If you are in a situation where you're finding that all of your needs, um, it's a larger cost for all of your needs than you have money for. So you're in a deficit just on your needs. I want to urge you to reach out to your local resources. So there's places like St. Francis House, there's places like the Puyallup Food Bank, there's, all of these different resources that are out here that can help you supplement some of these things. It is a need for you to eat, right? And so if you have assistance somewhere with that, whenever things are getting a little tight, and I would urge people, I've been in banking for a really long time. I've been in banking since I was 20. And I'm not going to say how old I am, but I'm older. So, there's been times where I've worked, in the branch and people have come in and they're like, oh my gosh, I just got laid off and, I'm making unemployment, but my unemployment is nowhere near what I was getting paid. And I was barely making it in the first place. So I don't know how I'm going to do this. Like, I don't know what I'm able to do. And I sat down with them and said, here are some additional resources that you have. And a lot of times people, have a hesitation to that because of how they feel about it. And I just want to share with people, there is no shame in making sure that you are well taken care of in your time of need. And there's nothing wrong with being in a time of need. And so for anyone who would rather, go hungry or, go without or, you know, I am a single mom of two kids. And so, raising them, there were times where I was like, oh my gosh, I need to make sure that they're fed. I can go without meals. We live in a society where that does not have to happen. And so I just want to urge all of you that if you are in a situation where, again, your needs, they're not being met by the income that you have coming in, there are other resources. Also, and I know this is really hard sometimes if there's different employment options. And so, yeah, I might be working here, but maybe there's some online stuff that I can do. Maybe there's, I know that there's some organizations or companies that will let you work from home. And, like if I'm a stay-at-home parent and I can't work any extra hours outside of the house, I might be able to do some things where I can be of customer service on the phone and work from home. So there's some of those options. And so I just want to encourage anyone who's really struggling right now financially that there is hope and there are people out here willing to help you. We're happy to have anyone come in and just say, hey, I don't even know where to get started. And there's no shame on any age. I've had people who have been married and their partner passes away, and their partner was the person who handled all the finances. And so these people come in and, they're like, oh, I'm so sorry. I'm so embarrassed. I know I'm older and I should know, but I didn't do any of the finances. It doesn't matter how old you are. A starting point is a starting point, and we're happy to help you with that starting point. And so, if that's something that you're in need of, please just reach out. And again, there's zero shame to any of it. There should be zero embarrassment. I work in finances and there's still things I'm learning, there's still things that I'm like, I didn't even realize that, and so please know that, you're never a burden. You're never, there's never anything to be embarrassed or shameful of. And there's people here ready to champion you. And so I just want to encourage everybody today. I know we're coming up towards the end of our presentation. We have about 10 minutes left, but I definitely want to open up the floor if there's any questions. So I'm just going to be silent for about a minute to see if we have any questions that pop up. And then if not, we will close out.
Last time people.
So I'm looking and I'm not seeing any questions in the chat. Let me do that. So I'm seeing that there's no questions in the chat. However, I am seeing that the library did post a link for some resources, just in case you are having falling on any kind of hard times or what have you. I know that whenever I go back to our branches at Red Canoe, I'm going to make sure that my team members know of these resources so that we can help meet anyone where they're at. And so with that, if anybody needs anything, feel free to come into any one of our locations. We're happy to help. Again, my name's Carissa Thompson, and I'm with Red Canoe Credit Union, and I'm happy to help you with your financial journey. So with that, thank you so much for being here.
Thank you, everybody, for coming this evening. We're going to go ahead and wrap up now. If you have any questions about this presentation or would like to view it again, it will be up on YouTube for 1 year after this program airs. And you can reach out to us anytime for assistance at the library or at Red Canoe Credit Union. We hope you all have a good night.